What determines my tax refund or amount due on from 1040? Imagine opening your tax return and wondering what actually decides whether you get money back or owe the government. Well, it all comes down to a simple comparison. Your total tax you owe for the year versus what you have already paid. If you paid more than what you owe, you get a refund. If you paid less, you need to pay the difference. The main parts of the Form 1040 that determine this are your total tax liability and your total tax payments. Your total tax liability is the sum of all taxes you owe, like federal income tax, self-employment tax, and any other taxes listed on your return. Your total tax payments include federal income tax withheld from your paychecks, estimated tax payments you made during the year, and any refundable tax credits you qualify for. If your total payments are higher than your total tax liability, the difference is your refund. If your liability is higher than what you paid, that difference is what you owe. Several factors influence whether you get a refund or owe money. First, your income from wages, self-employment, investments, or other sources adds up to your total income. The more you earn, the higher your tax liability usually is. Next, adjustments to income, like contributions to retirement accounts or paying student loan interest, can lower your taxable income. These adjustments are subtracted from your total income to get your adjusted gross income. Then, deductions come into play. You can choose to take the standard deduction or itemized deductions like mortgage interest, state taxes, or charitable donations. Deductions lower your taxable income further. Tax credits are another big factor. They directly reduce the amount of tax you owe, dollar for dollar. Some credits, such as the child tax credit or the earned income tax credit, are refundable, meaning they can give you a refund even if they wipe out your tax bill completely. How much tax has been withheld from your paychecks or paid through estimated payments also matters. If you paid more than your tax liability, you get a refund. If not enough was paid, you owe the difference. Your filing status, whether you are single, married filing jointly, married filing separately, head of household, or a surviving spouse, affects your tax rates, standard deduction, and credits you can claim. For Asian American families, especially those with multiple income sources like wages, business income, or investments from abroad, it is important to report all income accurately. Taking advantage of credits like the child tax credit or education credits can make a big difference. If you are married and file jointly, you might pay less in taxes and get a higher standard deduction. Filing separately might mean paying more in taxes but could be necessary in some cases. If you are not a U.S. citizen or resident, your tax situation can be more complicated. You might need to report worldwide income and follow different rules. After you submit your return, you can check your refund status using the IRS Where's My Refund tool. If you owe taxes, you can pay by check, electronic transfer, or through the IRS direct pay system. If paying in full is hard, you might set up a payment plan. Remember, accurately reporting all your income and claiming all eligible deductions and credits helps you get the biggest refund or the lowest amount owed.